Hello and welcome to CryptoWeeklies. In this video we are going to analyze Invesco QQQ ETF. It's a stock based ETF. It tracks the NASDAQ 100. None of the content is financial advice. The reason we are discussing this today as we approach end of year 2025, analyzing what these macro indicator based assets and the wider market based assets are performing. Right now the overall crypto market cap has taken a breather. Right now the price action, you can see there is some recovery in the crypto market, but still over the last 7 days prices are down. So till the market recovers, the crypto market, that is, will pay some attention on the macro indicators. The Invesco QQQ Trust, right now the price of that asset is around $600, $608 to be precise. The price is above the key simple moving averages, the 20-week simple moving average, the 21-week exponential moving average, which are between $593 and $598. The 50-week simple moving average is at around $550. So whenever the price has been below the 50-week simple moving average, again ignoring the bearish years, DCA below that or dollar cost average below that has been a great idea. Looking for our DCA models, this is again log linear regression based DCA for QQQ since launch in 1999. You can see QQQ launch at around June 1999, and since then the price at launch at around $50. Now it has done essentially 12x of that price. If you were to look for any specific risk levels where, again, let's say DCA below that or dollar cost average below that makes most amount of sense. This is a linear interpretation of the regression based fair value. Again, we did have polynomial regression and other degrees of freedom we discussed in the previous videos. Today we will be focusing on what's the fair value of QQQ per the linear regression based model. It says that price right now is overvalued. The fair value for QQQ is at around $366. Again, throughout the course of its journey, again, this is not a cyclical model. This is just a linear model. So throughout the course of its journey, wherever the prices again they trend up with time for NASDAQ, but whenever they are below or close enough to the regression based fair value, that's when DCA makes the most amount of sense. The opposite of that is looking at any bubble or bubble pop. Again, QQQ is not really the best guide for bubble pops. For that, S&P 500 makes the most amount of sense as it has been around for longer, and again it's more of a market mover. So this is the regression based risk for S&P 500. You can see whenever it gets close to that dotted red line over here, like it did back in 2021 and again back now in 2025, that's when the market cools off. Anytime again we get into this orange or red color, it can stay elevated for months to almost a year, like it did from April 99 till about September 2000, before coming down and climbing down the ladder below the fair value. Essentially that's where the dip buying for S&P made the most amount of sense, whenever the price was below this gray line. And if you have any specific risk levels to pay more attention to, this model again toggles based on and off based on whenever the risk levels, let's say essentially whenever it's less than 0.3 risk on the S&P 500, and that made the most amount of sense, like it did back in April 2020, April 2020. Again, if you increase the risk tolerance, you'd be closer to the fair value, but again miss out on some of the great buy opportunities during the recessionary time period. So again, a dynamic dollar cost average for S&P with whenever the risk is less than 0.5 or 0.3 based on your own risk tolerance made the most amount of sense. Right now the accumulation risk is very high for S&P 500. It's somewhere in this zone between 0.8 and 0.9 risk. Right now it's at around 0.95 risk, so it's getting pretty high in terms of the risk reward ratio for S&P. And QQQ slightly, again, this is the machine learning based price forecast. QQQ is slightly better right now, but again we have much less data for QQQ than S&P. Essentially QQQ had its first major peak during the launch when it within that .com era bubble, when it launched in the midst of a bubble in March, and then at around $40 to $50 and did a 2x within a year, and then fell from that $100 level to less than $17 at one point, and then had its recovery. Took several years to get above the fair value, even during the 2008 before the 2008 recession. NASDAQ did not fully recover from the 2000 bubble mania. It took about late 2017, early 2018 to get back above the fair value. And then essentially, if you ignore a couple of periods such as March 2020, January 2019, and again November, December 2022, QQQ has been in an uptrend. So the risk levels which make most amount of sense for QQQ are slightly different from S&P. If you look at any levels which holds key DCA related significance, it's anytime the price is within that point between the 0 and 0.3 risk. Right now the risk levels are elevated at around 0.39, almost 0.4 risk for NASDAQ. And if it were to go back to some of the again, if we were to predict a bottom in 2026, again the macro recession related bottom is all the way at around $135, but that's again if all hell breaks loose in 2026. That's the macro bottom looking from the 2008-2009 crash for NASDAQ. If we are looking at the fair value, if let's say if the price comes cooling off in 2026 like it did in 2022 after a parabolic 2021, the intermediate area of support for NASDAQ is at around $366. This is again a live model, so it reacts to the latest price point. So what is 366 now? If you want to extrapolate, you could do that. 3 to 6 months in future could be closer to $400 if let's say the price were to meet the fair value in June of 2026. So that could be a key level for NASDAQ to look for. With that, if you were to extrapolate any peak regression, again prices have not reached for NASDAQ the peak since about 2020. So again, whenever they come, when and if they come close to that $800, between $700 to $800 level, that could be a topping signal for NASDAQ per this regression based model. Again, the machine learning based model for NASDAQ, we just came up with it using seasonal ARMA based techniques. If you were to zoom in on the latest price action, again we have to zoom in quite a bit, as we have lots and lots of data for NASDAQ, unlike crypto. So if let's say we are looking at end of January, if the price of NASDAQ is and QQQ is somewhere close to $750, that could be a topping pattern if let's say there is a peak in late December, early January for NASDAQ. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.